Mottek On Money podcast at KBC.com, Apple, iTunes, and all your favorite podcast platforms. Right to the serious news out of the Middle East and the war in Israel. The American death toll rising to at least 22 now. The Israeli fatalities surpassing 1,200. Desperation sweeping across Gaza as Tel Aviv's response to the brutal attack by Hamas left neighborhoods destroyed. Israeli soldiers retaking communities near the Gaza border encountered streets littered with horrors, including bodies of civilians, including women and children. The death toll continuing to rise in Israel and the Gaza Strip following the surprise terror attacks by the Hamas military group over the weekend. We saw a seesaw session in the financial markets today with stocks moving higher. In fact, stocks eked out a fourth straight day of gains. Investors combing through the notes from the Fed's last big policy-setting meeting and awaited another key inflation reading that's due out first thing tomorrow morning on consumer prices. We got the latest inflation number at the wholesale level today. The price of oil ended lower for the second straight session after spiking on Monday following the terror attacks in Israel. We did see the price of oil down more than $2 today to $83.49 a barrel in New York. The notes from the Fed's last policy-setting meeting showed that Fed officials were highly uncertain about the future path of the economy and decided to proceed in a careful meeting-by-meeting approach to interest rate policy. Our coverage continues now, and joining us now is Ken Winans, money manager and president of Winans Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor. His latest Forbes article is titled The Questions Every Investor Should Answer. Ken Winans, thank you very much for taking the call. And as a market historian, I want to get your thoughts on what's unfolding in the Middle East. Israel is at war after the biggest attack it has seen since the Yom Kippur War in 1973. We saw oil prices originally spiking, but have pulled back, and stocks have actually been moving higher lately. Give us your assessment of things here at the moment.
You know, Frank, it's every now and then you're caught by the surreal sense that we do redo history over and over again, and many times it's the sad chapters of history. And when you go back and look at the 1970s, there was nothing but wars in the Middle East, terrorist attacks, hijacked airlines. I mean, the news was prominent across the board. And unfortunately, nothing is ever identical. There's different reasons for why things happen. But war was part of that. And unfortunately, when we think about what it does to us at home, you talked about what happened initially with crude oil. But I'm also looking at the fact that the dollar is now gaining an awful lot of strength. That's a positive if you're a tourist. It's not necessarily good if you're a U.S. corporation trying to export your products, because it means that your goods are now that much more expensive in an already inflationary world. So it does complicate things, not to mention just the tragedy of the human toll. But, Frank, with that also being said, the article I did before this one was titled about buying the dip. I'm actually doing that. Throughout this day, I've been actively buying in the market. I think earnings season is going to be a case-to-case study about which companies have figured out what to do and which companies haven't. And I think I've identified the companies that I'm stepping into that really are well-run, and they're making money and they're growing. But the one thing is, even with all the bad news in the headlines, you must just look at the seasonality of the markets and step in and start putting some of that cash to work, because I do think there's a buying opportunity throughout the rest of this year.
All right, we have, of course, the ongoing war in Ukraine and now the Middle East erupting. Ken, initially we also saw a jump in the defense stocks as well as the oil price spiking, and now things have pulled back. Given this very scary environment here, any specific places where you would be looking to invest in the bottom fishing that you're talking about?
Well, a couple of things just to keep in mind. I mean, I don't think you necessarily need to jump into defense stocks themselves. But I would say take a good look at, I'm really kind of surprised, actually, at some of the areas that, one, didn't really get hit from the June sell-off, and two, if they didn't take a hit, and on top of it, they're already moving forward. So a good case in point, if you were just to simply look at some of the bigger names out there, on the Dow Industrial Average, one of the top performers today happens to be tied to things that are within medical, which is a shock when you think about it. But take a good look at, like, if I was just to go down the list right now, look at Amgen. I haven't looked at Amgen in a long time. Amgen hit a new high today. So, again, where healthcare had been a concern, here's a stock that basically for the last month, quarter, year, and actually going out 20 months is all in the black. I would take a look at that. I would also take a, now and again, when you think of healthcare, I know that people think of just the typical drug companies and how badly they had been hit. Another one that I would be buying today is Novo Nordisk. I know that's a mouthful. It is an ADR. It's a European healthcare play. Its symbol is NVO. Same story. Up 5% today and is in the black for all through this year. This is what we call momentum plays. And I know that it's heresy to people who say, well, I want to wait and see the numbers first. What I'm saying is there are more buyers than sellers into these companies, and you need to pay attention to it. So healthcare would be certainly one area that would be inflation resistant going forward. The other area, believe it or not, is retail. Now, people are going to say, my gosh, retail, we've heard nothing but bad things. We're going into the holiday season. You want to start thinking that maybe it won't be that bad. People might actually be out there buying not only just brick and mortar, but also certainly going through digital. The name that keeps coming up on my list is TJX, symbol TJX. It's the holding company for several, what I would say mid to low price stores. I would look at stories like that. Last but not least, I think that the other big, again, and the area that held up well in the 1970s, and it's clearly showing itself now, insurance. I mentioned it in one of your previous shows, Frank. I mean, we don't like to talk about it. It also could potentially become a political issue in the next year's elections if insurance companies are raising their premiums too far, too fast. But we all have to grin and just basically deal with the fact that premiums will go up, and there's not a whole heck of a lot you can do about it. One of my favorite companies is an old line insurance broker called A.J. Gallagher. Its symbol is AJG. It's been around forever. Again, another nice name. Stock has done nothing but been a cork in the water this entire volatile 20 months, and I just love stories like that. Those are the kind of things that I would look at. Individual names, not industries. Find the companies that are doing it right.
On the air with Ken Winans, money manager and president of Winans Investments. And Ken, on inflation, we did get a new reading today, and that put downward pressure on stocks earlier. The latest wholesale inflation report showed the September producer price index moved higher, 0.5% for the month, a half percentage point higher, boosted by higher energy costs. And we've been enduring super high gas prices out or near record highs lately, and this apparently was reflected in this latest reading. We're going to be getting the CPI number out tomorrow. The Fed already has been noticing this. According to the notes from the last Fed policy meeting in September, showed that Fed policymakers were highly uncertain about the future path of the economy and decided to proceed in a careful meeting-by-meeting approach to interest rate policy. Given all of the cards on the table now and upheaval in the Middle East on top of it, what do you think the Fed's next move will be and where interest rates will be going from here?
Okay, if I was king for a day of the Federal Reserve, what I would do, next year's election cycle is going to be very contentious, very nasty. We all know that it's kind of like it's like a hurricane that's coming our way. We're all beginning to brace for it. Whatever end of the spectrum you're on, we all know it's going to be very contentious. The Fed does not want to be part of that mess. They will raise rates. I think the latest they'll wait is Q1 of 2024, but I do expect another rate increase this year. It's hard to say when they will do it, but during the holiday season, they typically don't want to muddy the waters with people's buying habits. But I do think we're going to have at least one more. Number two, the Federal Reserve has made it very clear, and I'm really kind of surprised when I hear some of my counterparts talk on your show and certainly other media outlets. The Fed already laid out their cards. They said they did not see their inflation targets being met until the end of 2025. So dropping inflation doesn't mean no inflation. The Fed simply is saying that they don't see the need to continue to raise rates. But the real thing that I'm trying to caution everybody on, and it was one of the reasons I wrote this recent article about people doing a very important financial health check, is that rates are going to stay high for the foreseeable future. I don't see them dropping rates unless the economy gets bad. So people need to stop depending on bull markets, long-running bull markets, to make up for their bad spending habits or just, being loose with money. It's time to really batten down. But again, that's what I think is going to play out. I think they're going to do one more this year, no later than Q1 next year, and then they're going to wait and let the
Millions of listeners and thousands of 5-star reviews rave about the hit podcast series In the Red Clay, the unbelievable story of Billy Sunday Burt, the most dangerous man in Georgia history.
He was a whiskey man, bank robber, hitman. He was a murderer. He's also my father.
Seasons 1 and 2 are available to binge right now, and bonus episodes are coming soon. Imperative Entertainment presents In the Red Clay. Get the podcast wherever you listen.
The election cycle play itself out.
All right, we've seen those benchmark Treasury yields start to come down a bit after hitting the highest seen in quite some time. Mortgage rates still hovering at around a 23-year high here, Ken, and banks will be back in focus this week, as you mentioned, with the start of the earnings season, which will be getting into full swing with the big names. The biggest, J.P. Morgan Chase reporting, then Citigroup, Wells Fargo will be delivering their numbers on Friday. What about the banks and all this and that vicious bear market we've seen in the bond market this year?
Oh, and well, it's been when the bear market really started last year, and then we had a bounce in bonds and pulled back. A couple of things. And as far as the banks go, look, banks make money when they lend money. And so they are going to have to kind of come up with a formula that works, especially with commercial lines. I've noticed, I run a business. I'm in the same camp as many of your listeners. The banks are more comfortable talking to us now about extending lines of credit, money for acquisitions, money for equipment, where in 2022, there was none of that talk. It was just, no, sorry, we're not doing anything right now. So they're loosening up because they do need to get out there. They've got a lot of money they need to put to work. That's number one. Number two, bonds. I think when you say the bond market, Frank, there really are bond markets. There's Treasury, Muni, corporate, just to keep it real simple. They're cousins, but they don't always necessarily react the same way. One of the very telling articles that I read in the last couple of days was what's going on with treasuries. And it basically said the two biggest buyers of treasuries, which were the Federal Reserve and China, suddenly stopped buying treasuries. That's one of the reasons that basically yields took off. Demand for the bonds were not there. That will be a common theme going into next year because clearly the Fed right now is not buying any more paper. Munis. If I had to pick the area that I would have really avoid right now, it would be municipal bonds for a lot of different reasons. But the number one reason is I literally just looked at a new client portfolio. This man is in his mid-60s, and he had municipal bonds that were coming due, and I'm not kidding, 2057. Frank, you and I will not be here. Many of the listeners won't either. You don't want to buy long-term paper in this kind of environment. And the thing is that I think municipalities in general over the next 36 months are going to have a very, very tough time refinancing a lot of their debt in this new interest rate environment. They're going to have a tough time raising taxes or paying for this. I do think there will be defaults throughout California, especially smaller municipalities. So that's an area that I would avoid. Now let's talk about corporates. The real sweet spot right now, we're still finding it, shorter-term corporate bonds, 3 to 4 years out. You're finding yields that are, I'm not kidding you, 8% per year on a 3 to 4 year note. And these are companies that are old-line companies. They've been around forever. If anybody wanting income, that's where I would look right now. Stay out of the geopolitical mess of treasuries. Stay out of the simple fact that California is a mismanaged state. You wouldn't want to lend money to a corporation that looked like that. And I'd look at the corporate world for your bonds.
On the air with Ken Winans and ExxonMobil, we see pulling back today. The company did reach a deal to buy the shale drilling company Pioneer Natural Resources, one of the biggest deals of the year here, Ken. Nearly $60 billion in stock. The shares of Pioneer Natural Resources did rise about 1% on this news. This evening, there's going to be a big gathering of people in the M&A world, the Association for Corporate Growth. M&A awards happening at the Skirball Center this evening. So M&A activity certainly starting to pick up here. What's your reaction to that deal and the outlook for M&A activity?
Well, it's interesting. I think there's always, there's an old adage on Wall Street, there's always money for a good deal, regardless of the economic environment. So I think if the valuations are right, you'll see M&A activity pick up. I've been in the game a long time, and there's been different players at different times that have been financing deals. As hungry as people are right now for yield, I wouldn't be surprised if we start seeing what we used to call leverage buyouts in the old 80s days. I wouldn't be surprised if we start seeing debt be the weapon of choice on a lot of these merger and acquisition activity type things going forward. The thing is, and this is something that I know people don't want to hear this, but, the equity markets, the old buy and hold days, I think, are over. We now are in a giant channel. The highs from 2021, the lows that we saw late last year, and we're vacillating back and forth in that environment. And almost everybody who's in equity, in fact, one of my upcoming Forbes articles will be about how does an investor become more trading oriented and things that you can do. So, but in that kind of environment, it's very hard to get people to step into equities. The other area that I'll bet you'll hear about it more and more, preferred stock. I think you'll find a lot more preferred shares, which are these high dividend paying equity plays, will also play a role in merger and acquisition activity going forward. There's a strong appetite for that kind of paper out there. So, I do think that activity will pick up next year, especially anything in natural resources.
Right. Well, ExxonMobil has been riding high, hitting new highs recently, and now this pullback today on this big merger deal. Any final thoughts, Ken, on oil or anything else that's happening, given the nervous time and the horrific time we're seeing unfold in the Middle East at the moment?
Well, I would just give the audience something to think about. I distinctly remember during the horrible time of the 9/11 attacks, and there were a lot of people who panicked and sold their stocks, and they did it out of emotional reasons, not for financial reasons, and did not get back in the market. I do think that before you pull the trigger and think it's going to escalate and going to get worse, I hate to say it, but the markets generally do respond well to conflict. I know we don't want to hear that, but it's true. But I do think the one area that people are still widely underexposed to is commodities. Commodities, I think, will do well going into next year. I know gold and silver haven't played out very well this year. I'm not necessarily saying you go into those, but I would look at just one of the few ETFs I'll ever talk about. It's a commodity-based ETF, symbol DBC. It's a commodity index. It does weight toward crude oil, but I would encourage people to bookmark part of your portfolio in that space, and that would be the index that I would use because it's by far been around longer than a lot of the other commodity ETFs.
Ken Winans, money manager and president of Winans Investments, market historian, author of Investment Atlas 1 and 2, Forbes magazine contributor. We'll be looking for your next article in Forbes. Ken, thank you very much for taking the call here this evening.
Thank you, Frank. You take care.
Thank you very much. Mottek On Money continues here on 790 KBC. 790 KBC welcomes Adam Sandler coming to the Honda Center October 23rd. Tickets are on sale now at Ticketmaster.com. Right now, caller 9 wins 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call right now 1-888-790-5222. Mottek On Money continues here on 790 KBC. Stocks finishing higher, up for the fourth day in a row as investors went through the latest notes from the Fed's last policy-setting meeting and got another reading on inflation, which came in hotter than expected. That was the Producer Price Index, which actually ticked higher by 0.5 percentage point as gas and oil prices have been soaring lately. Tomorrow we'll be getting the consumer price number first thing tomorrow morning ahead of the opening bell. Today we saw the Dow come in for a closing gain of 66 points, settling at 33,805. The S&P 500 moved up 19 at 4,377. And the NASDAQ gained nearly 100 points at 13,660. The yield on the 10-year note easing to 4.57%. That's the one that impacts the fixed-rate mortgage rates out there, which have been hovering near 23-year highs. Gold up about $12 at $1,887. In the crypto world, we see Bitcoin taking a hit today, down about 600 to 26,750. Ethereum up 3 at 1,563, and Doge at 6 cents. Taking a look at the price of oil, it pulled back today $2.48 at $83.49 a barrel. The damage has been done at Southern California gas pumps. Looks like prices have eased just slightly. Mottek On Money continues here in 790 KBC. We're still focused on what's happening in the artificial intelligence world, AI, taking the world by storm this year, and we're following all these developments very, very closely. How virtual assistants are transforming business and the distinction between AI and human virtual assistants, something focused on by Dr. Stephen Kupferman, a Los Angeles surgeon and co-founder of MedVA and BizVA, which provide remote virtual assistants to businesses of all kinds, including the medical community. Dr. Kupferman, thank you very much for taking the call with us here, and certainly we want to get an update from you on what's the very latest and what's happening in the AI world, especially as it relates to your firm right here in Southern California.
Yeah, absolutely. Well, thank you so much for having me on. It's certainly an honor, and I know you've been doing this for a long time, so thanks for bringing me on. We started a company that really kind of answered the call about 2 or 3 years ago to the Great Resignation to provide businesses, both medical and general businesses, with manpower to accomplish tasks that were sort of being pushed aside and not being done due to the manpower issues that we've been having here in the United States and in California in particular.
So tell us how you rose to the occasion, given that environment, and obviously hiring was a big issue. The Great Resignation appears to be over now, but obviously virtual assistants have taken off. People don't even know if they're talking to a human or a machine these days.
Get an inside look at Hollywood with Michael Rosenbaum.
Let's get inside of Anthony LaPaglia. My grandmother will be 95 in June.
I haven't drank water in 95 years. Look at me. Do I need water?
You look a little dehydrated.
A little bit. Your skin's a little dry. And when I do drink, it bores me.
Yeah.
Just drinking it, I start to nod off.
Inside of You with Michael Rosenbaum, wherever you listen.
Tell us how these technologies are being applied nowadays.
Yeah, so we tapped into the ability to work remotely by working with what are termed virtual assistants, which has become somewhat mainstream now, where an almost unlimited source of personnel to work for businesses and provide day-to-day tasks by using technology to work remotely, both with phones and computers. They've been able to adapt to AI as well, utilize those features that are available in whatever capacity. And so that's what we've done. We've taken a problem, which is staffing issues, provided businesses with people to accomplish tasks, and then integrated AI into their day-to-day performance.
All right. Tell us about Med Virtual Assistants, and you also have Business BizVA, right? That's Business Virtual Assistants. Tell us about some of the practical applications and what is most in demand nowadays.
Yeah, so on the medical side, most insurance providers have been using remote employees for a long time, and many doctors' offices, the private practice of medicine, was somewhat slow to adapt to that. And now most medical offices that are aware of us and other similar companies have taken advantage of the ability to find staff to do tasks such as be in touch with insurance companies, handle benefits, handle phone calls, and administrative work that needs to be done in the medical office to provide patient care, get people access to health care and medicine, help them out with the financial side of medicine, because we have a very generous supply of staff who can handle these customer service, reception, transcription, and so forth tasks that are done in the medical space on a day-to-day basis.
All right. What are some of the shortcomings of virtual assistants? Obviously, only a human can understand certain things, at least at this point, right? So what about the human element in all this?
Yeah, so the great thing about MedVA and BizVA is that we're all human. All of our assistants, our virtual assistants, are all human. They work specifically for the offices that hire them. Pretty much, any of these tasks, and so where AI and bots and other sort of administrative tasks fall short, we have people who can use those, but they're always available for all of the businesses that work with MedVA and BizVA.
All right. What kind of a reaction are you getting to this? Are people flooding to AI, or is it a slow process? How would you assess the demand for all this?
Yeah, I think businesses are beginning to try and find out what AI can do, and the regular employees that are working in businesses don't really have the time to try to figure it out, and so. When businesses start realizing that there is artificial intelligence that can help them work on a day-to-day basis, they need staff to start taking those tools, those AI tools, and incorporating them into their businesses. And so MedVA and BizVA provide administrative personnel to begin to utilize those, test them out, and see how they can be applicable to each and every business.
Very interesting. And from a dollar standpoint, how much do you think this whole world will add to the economy here?
Well, in 2020, right before the pandemic started, virtual assistants was about a $2 billion business. It's estimated to be about a $32 billion business by 2028. And the real drivers are that businesses need people. They need to employ people, and they need to do that at a margin that will allow the business to continue to grow and not have the personnel issue be the biggest burden to their bottom line. And so bringing in virtual assistants through MedVA, BizVA, and other companies that provide this, the bottom line on the payroll can be reduced dramatically, in most cases upwards of 50%.
For anyone that wants more information about this exciting technology, Doctor, what's the best way for people to find out more about it?
Sure. We have plenty of videos. They can go to our website at medva.com or bizva.com, and there's plenty of information on there to get started and begin integrating virtual assistants and AI into your day-to-day workflow.
That's great. So at this point, virtual assistants are not doing the root canals yet, right?
No, they're not going to be providing any care. They'll be doing all the other things that need to be done.
Sounds like
that the doctors can be doctors and patients can be treated efficiently and in a cost-effective manner.
Wonderful, Doctor. Thank you very much for taking the call and sharing your story with us here. Dr. Stephen Kupferman, Los Angeles surgeon and co-founder of MedVA and BizVA, which provide remote virtual assistance to businesses of all kinds. Thank you very much for joining us here on Mottek On Money on 790 KBC.
Thank you so much, Frank. Take care.
Mottek On Money continues here on 790 KBC following the war in Israel and, of course, the business community standing behind Israel here in the Los Angeles area with tremendous connections between L.A. and Israel. Joining us now is Yair Vardi, founding partner at Fusion VC, which is a venture capital company which invests in Israeli companies following all of the developments in Israel. And Yair, thank you very much for taking the call. All of us are sickened and heartbroken by the news, what we're seeing there in Israel, and now Israel fighting back. Tell us about what's happening. Obviously, you have a lot of connections between here and there, and give us the information that you have at this point.
Thank you, Frank. The past few days have been devastating. One of the saddest, most horrific times for Israel in our lifetime. 1,200 people got slaughtered, women, kids in their homes. The videos of just people going to a music rave, and I have a few friends that attended that rave in the desert next to Gaza Strip. 250 young people that got shot from close point, and some of them got abducted, including American civilians to the Gaza Strip. So, very, very sad times for us with relations to Israel, to all Americans.
So heartbreaking and so tough to talk about, Yair, and hope all of your friends and family are okay over there. And tell us about what businesses here are doing to support the Israelis there, those who have been affected by this horrific attack.
I think like everybody else, people are donating right now. I have some friends that actually got called for reserve duties, and a lot of Israelis from around the world are going on airplanes right now to Israel to be part of the war that takes place right now. Within the community here, we've been hearing on Silicon Valley firms, LA firms, New York that are donating hundreds of thousands of dollars, millions of dollars to a lot of grassroots efforts to support the victims of terror there. And we're also doing our part here in Santa Monica, organizing friends. And I invite people that are here to reach out to me if they're looking for ways to contribute to that.
Certainly. What is the best way to connect with you?
Email yair@fusionvc.com, and happy to meet and speak with everybody that want to connect and want to contribute to this effort.
Tell us about the investment activity that has been going on. Obviously, AI is a big subject of conversation nowadays, and interesting to note, AI has been used for security in Israel as well, and apparently there were some big failures in all of this. Tell us about that part of the story.
Yeah, and a part of the success story of the Israeli tech community is the talent that stemmed through the intelligence corps, the special forces, the sophistication of the intelligence corps in Israel. Unfortunately, not everything we can know just from communication, and it was a big strategic and tactical surprise in Israel. Myself and my co-founder for this venture is right now got enlisted in Israel. Both of us are ex-intelligence officers in Israel. Of course, the tech community come together in the last week, supporting both advocacy efforts, but a lot of just community effort to support those who got affected and the families in the last week in Israel. Yeah,
we've seen the Iron Dome system very effective, right? Were you involved in that system? And tell us more about how it protects against rocket attacks there.
My family is getting. My parents are in Tel Aviv right now. A lot of my friends are. Iron that was developed in Israel, but funded and a joint venture with U.S. Security companies is defending lives every day. The fact that we have Iron Dome when thousands of rockets are getting shot in Israel is something that helps families be safe, because Hamas does not recognize between civilians and non-civilians, and they should shoot to kill everybody. Israel is very fortunate to have Iron Dome. Unfortunately, the Hamas surprised us with slaughtering people on the border, and that's probably the most horrific day for Jewish community since the Holocaust in terms of numbers of deaths in those pogroms that took place last week.
Absolutely horrific, and of course you've seen the reports pointing to Iran in all of this. Do you think Israel will go after Iran's nuclear facilities after what's happened here? I
don't know. The truth is, I'm quite happy that America and Israel are together with that. Hearing the President Biden speech yesterday was emotional, I think, for all Israelis. The unequivocal support of America in Israel, the closest ally in the Middle East, the fact that America is sending troops to assist and to deter Iran, Hezbollah, and our enemies in the Middle East from interfering. And I really hope they won't interfere with what's happening. The funding and Hamas is allies with Hezbollah and working with them and with Iran. But hopefully they will be deterred because of the close alliance that we have with America.
Yair Vardi, the founding partner of Fusion VC, venture capital firm which invests in Israeli companies based in Santa Monica and Silicon Beach right here. Yair, we wish you and everyone all the very best, and look forward to, we're going to keep an open line to you on this big story, obviously, and thank you very much for sharing your thoughts with us here this evening.
Thank you so much.
That is Yair Vardy joining us here on Mottek On Money on 790 KBC.
In 1995, veteran police officer Michael Chappell was convicted of armed robbery and murder and has spent the past 30 years in prison. The true crime podcast, In the Land of Lies, explores the untold side to this story, one that could prove Michael Chappell is actually innocent. See why people are calling In the Land of Lies incredible, phenomenal, and a must-hear podcast. Binge the entire series now, and new episodes are coming soon. Imperative Entertainment presents In the Land of Lies. Get the podcast wherever you listen.